By the way, there's a listing of the Motilal Oswal Midcap 100. That's the ETF, Midcap ETF, the country's first, which has listed today and is listed with modest losses, about a quarter of a percentage point lower, because the midcap index is also now drifted into the red. To talk about that, Nitin Rakesh of Motilal Oswal is with us. Nitin, morning. Quiet start to your midcap ETF, but do you expect it to outperform the Nifty over a period of time, given that there is a lot of pessimism after the recent correction in midcaps?
Morning, Udin. I think, generally speaking, the environment in the market is fairly headwinded, both from a macro point of view, earning uncertainties and so on. The endeavor for us in trying to create an investment product that tracks the mid-cap segment wasn't so much focused on the short-term returns, but clearly creating an access product into that segment. And historically, clearly the mid-cap segment has delivered outperformance to the Nifty, and we expect this will hold true going forward as well over longer periods of time.
Nitin, hi, morning. The criticism about a mid-cap ETF, though, will be the fact that it's such a diverse bunch. It's difficult to club them all together and trade them in an ETF as you may easily do with a Nifty product. How would you defend that?
I think, the way the index has actually been constructed is it's actually a fairly well-constructed model, with no stock being more than 5%. And I think when you treat mid-caps, or when you trade mid-caps, the biggest fear that you almost always have is the higher volatility, the higher pullbacks, higher drawdowns. What happens is when you bunch them together in an index like the CNX Midcap Index, you tend to actually take that volatility away. In fact, it's very, very less known, very underknown fact that the Midcap Index in itself actually has lower volatility than the Nifty, with obviously higher return characteristics over longer periods of time. So I think, while it gets harder to trade some of these midcap names because of liquidity issues, or they are not all in the F&O segment, but clearly I think when you bunch them up as a basket together, you get characteristics and diversification benefits that you otherwise wouldn't see.
There's a lot of debate in the market, Nitin, about what earnings will be like over the next 1 year and whether they need to be scaled down. What did you come away from this earnings season in terms of the mid-cap pack? Because a lot of them did witness severe margin pressures.
I think the margin issue is true across the board. I think not just in the mid-cap segment. And I think, again, 60% of the companies that are listed in the space are commodity users. And as long as, commodity prices will actually continue to move up based on either global events or domestic inflation pressures, the margin pressure will be there. And I think the decision one needs to make is how much of this pressure is actually going to dent demand. Because if you pass on prices to the consumers, will that actually have a dampening effect on the consumption? And I think that's really an assessment one needs to make over the next 6 to 12 months. So clearly, we are not out of the woods yet. We might see a little more headwinded environment for the next 3 to 6 months. Budget will be an event, but not sure how big of an event, given that most of what we need to see is actually getting done by the government. At least we are seeing a little more policy action over the last 7-8 days. So I think it will be a challenging next, I would say 6 to 9 months. Very hard to call the direction of the market. At best case will be that we actually stay in a close range.
Good luck with the product, Nitin. Thanks very much.